Welcome to episode 2 of Guide to the Global Economy. I'm Josh Lipsky, Chair of International Economics at the Atlantic Council. And on today's episode, we are discussing the topic that is consuming Washington, the dollar. And I'm very pleased to be joined by my colleague, Jessie Yin, Assistant Director at the GeoEconomics Center, to unpack all things dollar.
Yeah, happy to be here. I love talking about the state of the dollar.
So we have a lot to get to, and we are going to bring in our guest in a few minutes, Dan McDowell, professor of political science at Syracuse, who's one of the world's leading experts on the dollar, and we've been debating the dollar with him for years. But Jessie, I wanted to start and just have a couple minutes back and forth here. What is going on? Because everyone was talking about the dollar last week. We live and breathe the dollar at the center, so it's nothing new for us. We're just like the rest of the world finally caught up to what we're doing. But the big conversation in Washington and beyond was a weak dollar. Does Trump want a weak dollar? And before we get to answer that question, and we'll bring in Dan, I wanted to step back and do a little Econ 101. What is a weak dollar? Why might someone want it? Because it's not so clear cut when you actually understand the pros and cons.
Yeah, so in the simplest terms, a weak dollar means that in an exchange rate, the dollar is relatively cheaper. The reason that's come up, I think, especially in the context of this administration, has been because it makes U.S. exports cheaper. To bring in a sort of relative comparison, China's gotten some flack in the past for perhaps purposely undervaluing its currency, and part of that is there's stronger export demand.
So that's why you could see a trade-focused administration like the Trump administration potentially wanting to benefit U.S. exporters with a weaker currency. But the U.S. has had for a long time a strong dollar policy. This has kind of been the orthodoxy in the U.S. And about a year ago, and you wrote about this, Steve Myron, Council of Economic Advisors, now at the Fed, wrote a paper. He did this when he was out of office before he came into the Trump administration, and it sort of shook Washington and maybe was a bit of a foreshadowing of what we're experiencing now.
That report definitely, I think, drove some of the alarmism last week, where the dollar was declining, but still within a reasonable range. But I think the context of the Myron report, where he almost posited this idea that the U.S. and other countries should get together, have a currency accord to purposely devalue the dollar, made, I think, President Trump's sort of remark last week that he's comfortable with where the dollar was at, sent it on a bit of a further decline.
Yeah, that was so interesting. President Trump's comment when even the dollar was tumbling, this is great, dollar's in good shape. You know, I had always thought over the past year, and maybe I was wrong about this, that while there are people in the administration who wanted a weak dollar, Myron, maybe others, that Secretary Bessent was a traditionalist. And I actually thought Trump was a traditionalist, just in this sort of notion that strong is better, weak is worse. And he's made some comments along that. So that's sort of what surprised me. Were you surprised last week when he said that?
Yeah, I was a little surprised. But I think the fact that Bessent has held firm the entire time that the administration's still pursuing a strong dollar policy. We saw that once President Trump nominated Warsh to the Fed, the dollar has picked up again. The price of gold has gone down. So
why have a strong dollar? What are the benefits? You know, we talk about the benefits of a weak dollar, why someone might want it. Why have we had the strong dollar policy for so long in the United States? Yeah,
a strong dollar, I think the first thing that comes to mind for me is that it makes U.S. debt more appealing. It makes U.S. treasuries more appealing. It means that the U.S. is able to sort of run this ongoing fiscal deficit. I don't know if you want to add anything else to that perspective.
I agree. I mean, you know, if this administration's stated goal is let's get mortgage rates down as one of their big priorities, you know, strong dollar helps you do that. You know, it makes U.S. debt more attractive, just like you said. So there's some cross currents here in the policy. That's what made last week so head spinning. All right, let's bring in Dan to help us make sense of it all. So I'm pleased to introduce Dan McDowell, professor of political science at Syracuse, author of Bucking the Buck, which everyone should read on the subject of the dollar and sanctions evasion, and senior fellow at the GeoEconomics Center. Most important, obviously. Dan, thanks for joining us.
Hey, Josh. Hey, Jessie. It's great to be here.
Jessie, I'll give you the honor.
Of the first question? Yes. Oh, my God. I'm so excited. So I think something that Bart and I talked to you a little bit last week, Dan, is this idea that some of the alarmism of the dollar is going to collapse last week was maybe exaggerated, but you made a good point that the context now for de-dollarization is quite different than it was a few years ago. And I was hoping you could use this time to get a little bit into that.
Yeah. So this question about alarmism, there's always alarmism when people are debating the dollar. This is one of those topics that gets a lot of people to start predicting, really cataclysmic changes. And I think that we're always going to see some of that. We definitely saw some of that last week. But I think that in my own view, um, there is a sense that we're seeing a shift in how the world, how financial markets perceive the United States, and by extension, how they perceive the dollar. And so I'll give you some examples as to why I think we are seeing this, vibe shift, if we want to call it that, in terms of how the dollar is viewed. So traditionally, in moments where there's, great political or economic distress, risks are high, uncertainty is elevated. In moments like that, financial markets, I'm talking about, right, sort of global pool of investors. We're talking about financial institutions and individual investors. They've typically converged on the dollar, right? In those moments of uncertainty, we would expect to see the dollar strengthen and US Treasury yields, essentially the borrowing cost for the US government, fall during moments of distress. And that's not what we've really seen in 2025 and in 2026. And I'll highlight two events in particular that I think illustrate that point. The first goes further back than last week, and that was President Trump's Liberation Day tariff unveiling, which obviously shocked the world. Everyone expected tariffs, but the way those were rolled out were quite outside of what most people's expectations were. And so what did we see? Well, we see a spike in the US government's borrowing costs, in a weaker dollar in this moment where financial markets were really disrupted. That's the exact sort of opposite association that we're used to. The second moment, and this is sort of related to the conversation that unfolded last week, happens in the wake of Trump's threats to initiate a military invasion of Greenland. I don't think that's the only factor, but I think that's a big part of what happened in the financial markets there. That was really unsettling to a lot of folks around the world. And I think here again, what we saw, though not as stark in April 2025, but we see a drop in the dollar, Treasury yields ticking up again, and we see gold and silver surging. And so I guess sort of zooming out, what do I make of all this? To me, I don't think it's just financial noise. I don't think we can just brush it aside and say there's nothing to see here. I think there's a clear signal in the data. We've now got these two sort of clear data points, in my view, where for at least a non-trivial share of the market, there's a reshaping of how the US is viewed, specifically as it relates to America's role in the world. There's a breakdown in trust in the US. I think we can see that in some other things that have emerged recently as well. US is now seen as an increasing source of instability, and that's affecting investors' attitudes towards dollars, their appetite for dollars. And so, the sort of, bigger change that could potentially unfold is a world where, markets don't converge on the dollar as tightly as they once did during these moments of distress and risk.
So, Dan, let me kind of give you the Treasury pushback we hear from them, to your point, which I'm broadly aligned with, and especially Liberation Day being a shift, because we saw this sort of sell America trade going on where currency, bonds, equities were all selling off. Mm-hmm. And I do think there's been a shift since then. But if you talk to folks at Treasury, they'd say actually the dollar's trading in normal ranges if you go back over the past 12, 24 months. No need for alarmism. Dollar strong, bond market strong, look at equity markets. And there's no alternative to the dollar. And this is essentially a lot of people doing what people do all the time, say the end of the dollar is here, and then they come back and invest in the dollar. So what say you?
Well, there is no alternative argument, which, Josh, you and I know have discussed before. It's fair, right? There are limited options. And so even if there's a large share of the market that would love to go somewhere else, they're somewhat constrained from being able to do that. And I think all the points that you just made that Treasury would bring up to say nothing to see here, in one sense, they're right. Again, we're not talking in this conversation, right, about some sort of cataclysmic scenario where the dollar is just going to, completely, the bottom's going to fall out and financial markets are going to implode. That's not what we're talking about. But what we're discussing here is the possibility, right, that there's going to be some sort of slow burn changes in terms of how investors view the US, where they're allocating their assets. And I think this idea of a sell America trade evolving over the course of the next 5 to 10 years is something that we could begin to see a slower and steady erosion of the dollar's role. This is a little closer to what folks like Barry Eichengreen have been predicting, right? Not that you're going to have some event that causes an immediate massive shift, but rather a slow and steady shift away from the dollar. That is really the only way to do some kind of change in the international monetary system without some really drastic disruptions, right? Which everybody wants to avoid.
Both with, I guess, the idea of sell America, the decline of the dollar, is there a tipping point there where we sort of look at a decline in the use of dollar in either investment or trade transactions where we will say, yeah, the dollar is no longer the preeminent reserve currency?
Easy question, Dan.
We can be
That's
speculative.
It is an interesting question. No, I think it's actually an important question. I think it's hard to pinpoint what the tipping point would be.
Mm-hmm.
I think there might be certain psychological markers that would raise some alarm bells, right? We have these quarterly reports from the IMF that show the dollar share among official foreign exchange reserves, and of course that's only one measure of the dollar's global role, and perhaps not even the most important, but it's the one that gets a lot of attention. And every time there's a slight drop, there's a story that comes out and there's discussion about what does this mean. The dollar share is somewhere around 56% of reserves. If we were to enter a world 5-10 years from now where the dollar is under 50%, I think there's some sort of psychological threshold there that would be interesting. I think the bigger
that's
picture,
interesting, 50%, because I think we'd get there within 10 years. Yeah, that's a good point.
I do too.
Yeah.
I do too. And I think that I think there will be, I think that would be a momentous, of course, right. A shift from 51 to 50% doesn't really mean that much. But again, psychologically, there are these, just like gold hitting 5,000, right?
Yeah.
Was a big
Right.
deal, where we create these arbitrary numbers that for whatever reason attract more attention to something. And I'll just say, though, I think this point about the tipping point is important, because when we think about like financial networks, they're the dominance of the dollar is sort of predicated on the idea that that's where the vast majority of the market is, right? And so the alternatives are so much smaller, they can't compete at scale. And so as there, if there is erosion in the dollar, whether it's the reserve role, whether it's cross-border payments, then that would imply, right, that within other currencies, that their share is getting a bit larger. And the larger they get and the smaller the dollar system gets by comparison, right, then I think it does start to potentially capture some sort of momentum that can sort of propel it forward a bit faster. I don't know where you reach the point at which the pace really starts to pick up, but I think that's something to think about.
One thing I think about, when we talk about the dollar, is you might not know the changes that are happening when they're happening. Gita Gopinath has done such great work with this on the end of the pound as a reserve currency. And you wouldn't have known if you were in the UK at the time that the pound was ending its run as the reserve currency, that it was ending its run as the reserve currency. These shifts happen in a way that are hard to tell in real time. And, my research on this, Dan, as you know, has been that payment systems are the leading indicators on these issues, and they're a demand signal. And that's where I want to get to you on sanctions, because when we talk about the dollar last week, we've been talking about macro. We've been talking about treasury markets. We've been talking about, yen carry trade and currency swaps with the euro. But there's another role of the dollar that you've written about, the national security role of the dollar. And I just feel like Washington continues to dismiss the erosion on that front.
Absolutely. I love this phrase you use, demand signal. I think that's really important not to gloss over that, both in the conversation about sanctions and more broadly. And maybe we can come back to this later. I would point to the surge in gold and silver prices. as yeah, absolutely. There's some speculation there, right? But this is a longer term trend, right? In the prices of precious metals. I think that's a demand signal. I think in the same way that the emergence of alternative payment systems, whether we're talking about China and its own cross border banking network, whether we're talking about some of the wholesale central bank digital currencies where there's technological innovation.
Plugging the
Um,
CBDC tracker and dollar
there
dominance
you go.
monitor
There
from
you
the
go.
Atlantic Council. Contractually obligated to do that. Sorry, Dan. Keep going.
No, of course. So yeah, just to kind of wrap it up, I think all of that together again is evidence of this shift in perceptions among market participants. And the Tina argument that there is no alternative argument, um, it's right, and yet, as I've said before, I feel like if that's your defense, if that's your plan for maintaining dollar preeminence, good luck with that. It may work out, but I don't think it's the best position to defend and protect the dollar status.
Okay, Jesse, I got to turn it to you for a second because what Dan's talking about is this sort of defensive posture of there is no alternative, Tina, as he said. I feel like other countries are taking advantage of that posture. And we just saw Xi Jinping's, it wasn't a new speech, but it was an old
Yeah.
speech that was re released over the past few days. Feels intentional from the
Hmm.
Chinese to make the point now that they did.
Yeah. So his speeches tend to get published in writing months or sometimes even an even longer timeline after he actually gives them. But I definitely think the release of it last week feels a little intentional, at least. And I think it's interesting that for the US, you can say there's no alternatives, but I think my take on where China or the PBOC stands on this is they don't want to be the global reserve currency. There are certain things that they want to control about their financial markets, about their exchange rate. That means that they don't want this quote unquote exorbitant privilege. But in Xi's speech, he says it's a matter of financial security and stability that the yuan is a global reserve currency. And I think they're looking for this multi-currency system. I would love to hear y'all's take on this too. And in some ways, I think China has built the payment systems and is searching out use cases for demand to make that possible. And so, at least in that way, I'm like, is the US having a defensive posture about the wrong thing? Would be kind of my question, at least.
Yeah, I mean, Dan, this is what I wonder about a lot from China's position and the U.S. position is are we measuring the right things in the United States? Are we taking a proactive stance? And what I'm really curious to ask you, Dan, for listeners out there who are, maybe not on the Bloomberg terminal as often as we are at the center, why does it all matter? I mean, Jesse talked about exporters. Okay, but let's say I'm not an exporter, just going about my life in the United States. How much do I care about weak dollar,
Yeah.
strong dollar, and the future of the U.S. currency?
It's an important question for the average listener because for most Americans the exchange rate is not something that they're dealing with on a day-to-day basis. The world, because it runs on dollars, if you're living in a country that issues that currency, you don't really have to think about exchange rate movements. If you're in another country and oil's priced in dollars and you're paying for oil, then changes in the dollar's value can impact how much oil costs, right? So there's things that other countries have to worry about that we don't. So one reason you should care is that a world that runs on dollars is one that insulates Americans from a lot of risk. It insulates a lot of American businesses that are involved in the global economy from risk because they're receiving payment, they're making payment in their own currency, and they're having to hedge against the possibility that the dollar could weaken or strengthen relative to another currency that they would be using. They're not using those currencies; they're using their own currency. Then there's also the issue of U.S. government borrowing, and there's debate about this, but the conventional view is that having the dominant reserve currency basically allows the United States government to borrow somewhat cheaper than it would otherwise borrow. We obviously know the United States government has a substantial amount of debt, and rates on that debt have been going up, and there's a lot of concern in Washington, and rightly so, about the cost of servicing that debt. So anything that would contribute to rising borrowing costs would be a problem. And then lastly, it's just the issue of sanctions, which you were touching on earlier. So by virtue of having the currency that the world economy runs on, the United States is able to cut select actors out of that. We saw this with Russia, most notably, right? And impose economic penalties on countries that are doing things the United States doesn't like. So it's a tool of foreign policy as well. And so, for all those reasons, there are some real benefits for the U.S.
I think these are good reasons to want a strong dollar from my perspective. You get cheaper borrowing costs. That helps basically everyone as they borrow money, be it for car or house, whatever it is. Protect U.S. national security. And as Dan said, insulate yourself from shocks that the rest of the world has to deal with much more frequently than we're accustomed to in the United States. Okay, so Dan, we talked about the risks of the dollar, benefits of the dollar. I want to ask you about what happened after the dollar alarmism week. Then, as Jesse said, Trump picked Kevin Warsh, and the world went back to normal. Gold went back down, dollar rebounded. So was it all just a mirage? Was it a false alarm? Why does Kevin Warsh somehow make everyone feel that we're back to reality? What happened?
Oh man, I mean, this is just a classic example of financial markets in the short term, right? I think we have to separate short term from long term here. Trends from again, just sort of day-to-day reaction to headlines. The Fed chair is a market moving event, right? When you have a shift in the Fed chair. And I think the reason the Warsh pick seemed to ease some folks' minds was because I think some of the alternatives, I think most likely Kevin Hassett here, who was viewed as someone who was, perhaps too political and would be too close to Trump and therefore would raise significant concerns about the Fed's independence moving forward. And what does that mean? That might mean that, the Fed cuts rates when it should be holding, and that leads to high inflation. We've obviously just sort of survived a period of high inflation, and so going back to that would be a problem. And so Warsh, I think, was viewed as a little more middle of the road. And so this sense that perhaps the Fed's institutional integrity is intact and will stay intact is what sort of had that calming effect on markets. And so I think that's the short-term explanation. In the long run, I mean, we'll have to see. I mean, Warsh is likely at some point over the next 3 years, assuming he's confirmed, to have a disagreement with the president. And when that happens, we'll see what happens. Or we've seen how the president has treated the current Fed chair and members of the board. And I don't think the potential assault on the Fed is over just because Trump has picked his man.
Well, that's ominous.
Yeah.
I agree.
Should we get that on Polymarket?
What are they saying about Polymarket about the dollar? Could you?
I'm actually not sure, but I wouldn't be surprised if there were things of like, is the dollar going to collapse in the next year?
Can you have betting markets about the dollar? I mean, isn't just currency exchanges a betting market on the dollar all the time? Like to have a betting market on the dollar
feels
like
accurate,
a strange concept. Well, one thing you're touching on, Dan, that I think is important, and we didn't talk about a lot, but it's just worth underscoring in the couple minutes we have left, is that there are a lot of things that make a reserve currency. World's largest economy, depth of our treasury markets, payment systems, but underpinning it all is rule of law. Fundamentally, you need to have trust that you have a dispute, it can get litigated. That is something we have just taken for granted in this country ever since we've had a reserve currency over a century. And I wonder how much, and I know this is not an easy question to answer in the 30 seconds I'm going to give you, Dad, but how much it's really about Greenland, it's really about Liberation Day, or those are all just symptoms of a larger issue that's going on over the past year?
Well, I think rule of law, why it matters for investors and how they perceive an economy and a currency as being a place where they're willing to put their wealth, to put their investments. Rule of law is fundamentally about trust and certainty. Rule of law indicates that if X happens, then you can expect Y, right? As opposed to uncertainty, the lack of trust, which is if X happens, who knows, right? Markets, investors don't like uncertainty. They don't like risk. This is a fundamental reason why China's currency, right, even if it reforms its financial markets, will face challenges because of the lack of rule of law. And so I think rule of law is one of those things that, compared to the list of factors that make the dollar the reserve currency, you're absolutely right that those are the things we typically refer to. And rule of law is this thing maybe that we don't often think about because it's kind of a constant here in the United States. It's always sort of been that way. And so because of that, we don't see it and we don't really notice it or recognize its importance. But if it were to go away, if it were to erode substantially, right, then we would notice.
So there is a large currency union which has rule of law, which doesn't have all the capital markets it would like, but is trying to. It is the actual closest rival to the dollar when you think of currency reserves. It is not the renminbi for all the problems of capital controls and otherwise we know that China has. So can Europe finally get its act together? Is this Europe's moment? Jesse, over to you.
I feel like last year we had a whole panel just titled, "Is this Europe's moment?"
I think every year we have that
panel. We keep waiting for this moment. I'm really not sure, but it did come out last week when there was this uncertainty with the dollar, when Bart and I were sort of researching on this issue with Dan, that the euro had appreciated not just against the dollar, but against a basket of currencies. And so I think as we continue to see these maybe like moments of uncertainty and the markets react, the dollar declines, it seems like we're still trying to figure out where these investors are going. I don't think gold is the whole story. It doesn't seem like there's also a rush for euro-based assets either. So where are they going? Are they going to stay there? But it could be Euro's moment. Very well could be. I would like my next paycheck paid in euros.
Okay, we will note that to finance.
Yeah, we're waiting, Europe.
Yeah.
Are you going to step up? Is this the year you finally do it? I think the same issues that have been around for years with regard to sort of the euro's potential remain today. Sovereign bond market's too small. Europe doesn't conduct enough cross-border trade in its own currency with other countries. Governments issue their sovereign debt separately. These are all things that Europe will have to address. The United States, the White House right now seems to be doing everything it can to give Europe reasons to move forward with a more muscular euro policy. The sort of shift in the U.S.-European security relationship is the kind of thing that is provoking a lot of conversations in Europe among political elites about what needs to be done, mainly remilitarization, which will require a substantial amount of public spending. We're talking nearly $1 trillion over the next decade. And if that is accomplished, that would come with some significant increases in euro assets. And so, maybe we move slightly away from this. There is no alternative. Maybe there are alternatives in the form of these safe euro assets. But I'll just end on this, which is, back to this sort of ominous story. There's another world in which, right, the European project in this current moment of populism faces some real challenges, right? If you were to end up with a far-right populist government, especially in a critical country like Germany or France, which, so far they've avoided that fate, but I don't think those parties are going away. And then we're in a completely different world where we're not talking about a more muscular euro policy, but we're talking about, can the euro hold, right? And so there's, again, uncertainty. I think I'm just saying there's a lot of unknowns. I guess I'll just end it there.
I'm glad you brought up politics at the end, because I think in an economics center, we shy away from it necessarily because it's not our wheelhouse. But just to be upfront about it, and the reason we call it geoeconomics is because the two worlds are interconnected. And the strength of our currency, as we talked about in the U.S., has always been downstream about the fundamentals of our society. It's true in any country. Currency is a reflection of the society upon which it's built. And so we have to understand that, those of us who do this work, that this does not exist in a vacuum. And the currency we have taken for granted is not a self-fulfilling prophecy. And so, Dan, Jesse, I thank you for joining us today to talk about the topic that I think is going to continue to dominate both our work at the center and policy in Washington and beyond. And thanks everyone for listening to episode 2 of Guide to the Global Economy. And now I am supposed to promote the podcast by saying things like subscribe and listen wherever you find podcasts. And I hear that on other podcasts. So now I'm saying it here.
Hey, thanks to you both. Let's do this again.